And I'm joined today by Lady D. How's it
Hey
going, Lady
everybody.
D?
Good. I'm great. How are you?
Good, good. All right. Well, we will start today, as always, with a little bit of TA from me, just to give us an idea of what I'm seeing in the market. And now I have a completely different opinion than I had yesterday. So if you guys remember when the market opened yesterday, we had the day before broken out of balance to the downside, and we were opening right at the balance area low. And so I was saying basically, if we get new selling below the balance area low, we're looking to take the market lower, and it could lead to a massive sell off. It could lead to a multi day trend to the downside as a breakout of balance. Well, the market did something a little different. It started that break lower, but then that break was instantly bought straight up with what we call a V-shaped recovery. So let me just zoom in here on yesterday's range. We'll expand out the profile, and you can see this happen. The market was selling off. It had all this selling pressure, and then as soon as that ended, it literally turned around and went straight back up. It even closed almost exactly at the opening price. Okay. So, or in the M period before the close, it got almost up to the opening price. That is very important. That is basically the market telling you it's a go nowhere, do nothing day. So if the market went nowhere and did nothing, that's less bearish, right? Whereas a break of the balance area low should have led to a massive trend down day. And also the fact that the liquidation break was immediately bought back up. And that's not one, but two liquidation breaks getting bought back up because the same thing happened the day before. The market broke out of balance. It had a massive sell off, but by the end of the overnight, they were back or at one point in the overnight, that night, they were back at the opening price again. So two liquidation breaks in a row, both of them getting instantly bought back up, is a way for the market to give us a signal that buyers are stepping in, that they are defending the lows. They don't want to let this market go lower. They want to keep the market in the range that it's in, or even maybe try to take it higher. Okay, it is bullish to see. So now here we are after the overnight traded, and the overnight inventory is completely net long. Okay, we are opening with a gap up. So the first order of business for the market this morning is to try to fill the gap, to try to get back down into yesterday's range. If it cannot do that, it's a gap and go. Even if it does fill the gap, we're still inside the previous balance area. So forget the balance area for a second. Just the fact that we had two V-shaped recoveries and now we have a gap up increases the odds of a gap and go. Okay, because that's buyers stepping in and momentum being confirmed. So another confirmation of momentum, which is a gap and go, would mean the market's going to the moon. The fact that we dipped below a balance area and we have now pulled back in to balance makes this a look below and fail of a balance area, which increases the odds that we're heading to the opposite end of balance. And on top of that, the fact that the overnight high, or that the all-time high was made in the overnight market, increases the odds that it needs to be revisited. So you've got signal after signal after signal that is stacking up this morning to tell us this market wants to go higher. Now, that doesn't mean we can't have a choppy sideways day where it kind of goes nowhere all day intraday today. And it doesn't mean we can't turn around and start heading lower, but it tells us that lower is now very unlikely. It is the least likely scenario. And even if we spend the day chopping around sideways today, it'll still likely lead to a move higher next week. So I would describe myself as bullish this morning, looking for the market to try to fill the gap, assuming it won't, or that if it does, it'll bounce right at yesterday's high. So I would describe myself as bullish. D, what are your thoughts?
Yeah, well, I wanted to go back and talk about a little bit what happened on Wednesday, since I know we got cut off and I had so much more I wanted to say and I wasn't able to. But for those of you that were listening, I had, as we talked about on Wednesday, I had the bullish stance for the day on Wednesday. But I want to emphasize that I may have been wrong in the direction on Wednesday, but when I look at it today, I'm going to show you my long-term charts again. I'm still bullish on the market. And I don't know, Charles, if you saw the interview with Paul Tudor Jones on CNBC. I think it was yesterday morning.
I saw a few clips of it on
Yeah, it was super
Twitter.
fascinating. I thought it was so interesting. And he was saying, yeah, he's positioned bullish in the market. He's short commodities. And I thought that was just so interesting, since there's been a lot of talk out there about how, the economy is showing signs of weakening, certain signs, and they think that the market, isn't going to go to all-time highs. But anyway, I thought that interview was really great. So I just wanted to talk about what I saw on Wednesday, that even though I had a bullish bias at the opening, I was able to change my mind quickly and still make a lot of money on the day. So I just wanted to point out for those of you on Wednesday that were trading that the market up here, it tried to go higher in the A period, the B period, and the C period, and it just couldn't. I also was watching this big node of volume from the previous overnight, because I know that's going to be resistance and take quite a while to get through if we were going to go higher. When that didn't happen and this thing broke, and I saw this volume node below the overnight low, below the previous day's low, I'm only going to take short trades. So for any of you that got, confused on that day, I just wanted to point out how I was able to stay on the right side of the market on Wednesday. Also, when we did, and I'm going to show you some charts in a moment, candlestick charts, to show you when we got down here, the volume dropped and there's a taper. So once I see that, all I know is I'm going to prevent myself from losing any money. I'm done going short, and because the volume tapered, and then look, at one time framed up into the close. And I think there was some Tesla earnings, other things that were helping this to retrace. But that was a large retracement that we saw on Wednesday. And as Charles said yesterday, same thing. We sold off a little bit. We did leave this poor low. I'm cautious of that today. We also have a prominent POC here that we need to look at, which is also where this volume node is. But so for today, I'm still with the thesis that I had on Wednesday. I'm really bullish. Obviously, we're opening with a huge gap, which on the NQ is larger than on the ES. But these are just things I wanted to show you guys for what my thinking is for today's market. I want to show you. I want to share. Let's see. I want to share my screen and show you the long-term charts. I think we looked at this the other day, but I'm going to look at it again. Where is this one? Okay. So first, I wanted to show you the monthly, which we looked at before. And again, I want to point out these. I want to point out these large wicks on the monthly time frame, right? Then I'm breaking this down. This is yesterday's market, and I wanted to show you this was yesterday's bottom. And if you can see, this is a big reversal down here. So the buyers were really present, and the buyers are present here. So just like Charles said, there were buyers waiting at these lows to buy it up. And now you can see we've been going up quite a bit since then. So sometimes the market needs to break before it can rally, right, Charles? I think
that's the rule.
That's the rule. Now, these are my trend lines from, this is the weekly chart. And I wanted to show you that the bottom or the daily chart, the bottom on Wednesday was at this trend line. And that's exactly where it got bought up again. Now we've re-entered the previous balance here. So again, this is very bullish in my mind. And I just wanted to point that out. And then this is the only thing that I'm going to watch and be very cautious about. We did have on the daily, the first lower high and the lower low. But until that changes on the weekly chart, I'm going to be cautious, but I'm still not going to become bearish. So this is how I make, this is my analyzation that I go through in the morning before the market opens. So Charles, what are your thoughts on all of that?
Yeah, I agree with all of that. And I liked the fact that you brought up the idea. This is something that I think it's hard to teach people, that the trick to trading is being willing to change your mind very quickly.
Very quickly.
It's like, what is that expression? You have to have like strong beliefs loosely held. It's like you have to see something in the market and believe it's telling you something, and you have to have like confidence in that and believe it and trust it, because if you don't have the confidence, you won't enter the trades. And if you don't enter the trades, you won't make the money.
Right.
But at the same time, because the market is constantly changing and your reading of it can always be wrong for any reason, you have to be willing to admit you're wrong and switch sides really quickly. And
when I was a new trader, I really struggled with that because, people would say, well, if I was in a loss in a trade and I knew I made a mistake now I have things that I use to help me if I'm wrong. I get out at certain points on purpose because I would convince myself that I was right against all of the market profile information that was telling me I was wrong. And I think it was just you don't want to admit you're wrong. So I would hold trades longer than I needed to, and then I would lose more money than I needed to. Now I don't do that anymore, thankfully, but it's one of those things as a newer trader that you really want to caution about. Like, don't hold positions and believe that they're just going to turn around. Because, like we've said on this show many times, you'll be shocked how far the market can go in one direction, how far when the momentum is there, how far it can push it. I mean, I've been shocked many, many times about that.
Mm-hmm.
So it's important to realize, like, if you're in a trade and you're wrong, just admit it and get out. I mean, and a lot of the famous traders I've been reading about in the Market Wizards, I'm like reading all of those books right now. Many of the guys who were successful traders say that they don't accept losses. They got out really quickly.
Mm-hmm.
To prevent losing capital, because the number one thing about surviving in this business is protecting your capital, whether you have a small account or a large account. I think I mentioned this last week. I started with a very, very, very small account, barely enough money to trade. And I had to be exact with everything. And I think at first I felt like, oh, I wish I had had a bigger account because I wouldn't have had to be so careful about margin and all of that. But it taught me a lot about how to be more precise with my entries and my exits and all of that. So
Mm-hmm.
I think, yeah, I fully agree with helping teach these things, because if I can prevent other people from making mistakes that I made as a newer trader, that's a win for me.
Mm-hmm. Yeah, and when you talk about that concept of it'll shock you how far they push it,
It's so true.
those scenarios tend to happen to everyone at the same time, which is why it happens, right?
Yeah,
The market will go to a place where it looks like it's going to break higher or it looks like it's going to break lower. It'll start to break. It'll move that direction for, say, 15 minutes, 20 minutes. It'll move in that direction. It'll get everyone convinced that they're right and getting in a long trade or a short trade. Then it'll go the other direction and it will just keep going all day over and
yeah,
over again. And this is one way that the brigade, actually, I learned from the brigade, was that I tended to notice the days where I would fight trades, where I would stay in losing trades or keep trying to like buy dips when the market keeps selling off or
yeah,
whatever. Like times where I would try to fight the market, I would notice the chat was doing it too. I would notice that everyone in the chat was also saying, this thing can't keep going. It has to reverse here, supports at this level, da 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 da. And so I started to realize that the reason that that happens is because everyone does it at the same time. Everyone is convinced it can't keep going and they keep trying to fight it and then they get
yeah,
taken out.
yeah,
So that taught me that when I feel like I understand what the market is doing and it doesn't, what it should do, it doesn't, I should just change my mind and go exactly the opposite. Because if I do it immediately, there'll be all these other traders getting squeezed and getting forced out of trades. There will be plenty of time for me to make money off the move as long
yeah.
as I switch quick.
I think that's one of the most important lessons for newer traders, for sure. And I love the brigade too, because I love it's fun to just watch in real time what people are asking and what they're thinking and what they're looking at, and it's
Mm-hmm.
you know it's fun to be part of that community. So if any of you want to join the brigade, come join us, because I think that improved my trading so much since I started listening to you, Charles.
Well, thank you. I wasn't trying to turn this into a plug, but I appreciate it. Yeah.
No, I know you weren't, and I'm not. I'm just being honest. So
No, and
yeah,
I agree. And the other fun thing that I was just thinking about the other day with the brigade, and you've been here the whole time, so you know about this.
yeah. I think I
But
was one of your first like 3 followers or something.
yeah, it's like the type of responses and stuff that I get have grown with me and my skills and with the like community growing over time. So
Yeah,
where now there's always like new people that join and they ask the same old questions that like we haven't thought about that in years because
yeah,
we figured
that's
that out
true.
so long ago. And so you kind of get reminded of like, oh shit, there's still people trying to figure out these like basic things. But
Yeah,
then you also have this conversation happening that's a slight like level up of all of that, of like this group of people that have been trading together for years that have a system and have an approach and they know what they're looking at. And so they can have kind of a more nuanced conversation.
yeah. It's been fascinating also to watch your teaching and your philosophy expand since you first started. And I think we both have similar trading with Jim Dalton's intensive courses and all of that. And it's been really
Yeah.
fun, especially as if you've done your online classes. Like they've just gotten better and better every single time. And I'm just thankful for this community, because I look forward every day to like having, the comments and the charts and a community to feel like you're not just sitting there alone, for 7 hours watching every tick, because that's can be not so fun sometimes. But so that's really what I have for today in terms of the NQ. So any other questions?
I did want to mention, it looks like Bill Burke signed up for the membership through YouTube. So he got the little special symbol. It's the first time somebody's done that.
Oh, cool.
Welcome, Bill Burke. Good morning to everyone saying good morning. I don't see any great questions here. Here we go. Red Pole says, you said something 2 days ago during the live stream about using the ticks with the price action to help you spot resistance and support. Can you please explain? Sure. Do you use the ticks, or do you just focused on price action?
I really don't. I only use it when you start talking about it. I'll look at your charts, but I don't have them up on my charts.
Okay. There you go. So the ticks, basically the way I use the ticks is, what I was explaining was I always start. Sorry, let me switch back to my screen. I always start with, the market profile chart. The market profile chart is where I'm looking at price action. Price action is the purest information. It is the most reliable, because what price action is showing you is what's literally actually happening in the market. Any derivative of that, whether it's like a moving average or a VWAP or a blah, blah, that's a computer making a calculation based on the market generated information. But that's not the literal market generated information, So the price action itself, where does the market go? What price levels does it go to? When it gets there, how much time and how much volume does it bring in? That's where I get my analysis from. That's where I get my idea of what the market is doing. Once I feel I know what the market is doing, I then use the market internals, whether it's the book map or it's the other internal screens, as sort of a guidance to tell me, am I right? Am I wrong? Are they confirming what I'm seeing? And then I also use the ticks sometimes to pinpoint entries. So let's say, for example, today there's two places that I could get into a gap and go trade. One is a half gap fill. So basically, whenever the opening bell rings, I can figure out what is half the range between where we are and where yesterday's high was, and I can look to enter a trade there. So today, I would probably be looking for this area right here between 63 and 59. Okay, that area is where the half gap fill is going to be. We've got nodes of volume here. We've got previous day and overnight lows here. So that's a great place for buyers to step in, right? So
Can
let's say
jump in 1 second about the gap fill, something I just want to warn people about that I've seen happen over and over, and I just don't want anyone to get caught in it. And I think we mentioned this once before, but generally the market will bounce 1 or 2 ticks before that gap fills. So if you're going to do the full gap fill, I would put your stop at least a point above the fill, so you don't get caught in that bounce that generally I've seen happens before it actually fills.
Yeah, so she's saying if you're shorting the market to fill the gap at the open, put your take profit a point above the actual high, because sometimes it gets right to it, literally right to the high, and then it's like boop, and it fucking goes. And it's
because the market knows that everyone's got, they're going for the full gap fill, so they flip it right before and then to take people's money. So
and then that usually becomes a gap and go that runs away. Yeah.
Yes.
So that's a great point. Thank you for mentioning that.
Yes.
But anyway, so let's say I'm watching the market. I'm looking for, support at the half gap fill. I have no idea whether the market's going to find support there or not, right? When that opening bell rings, it's 50-50 in my mind. I have no clue. So what am I going to be doing when the market pushes down to that price? I'm going to be watching the ticks. So at that moment, I'm going to say, where are the ticks? Now, again, not where were the ticks and where did they move to? That doesn't matter to me. They could have been lower going up. They could have been up going down. That doesn't matter. At this moment now, the price is at the level I want to know if it's support or resistance. I look at where the ticks are, and at that, and I'm talking about like that second, like that moment, when the market touches that price, what happens to the ticks? Because often what will happen, if that is going to act as support, price will come down. It'll touch that level that I'm watching, and then the ticks will bounce. Boop. And it doesn't matter if they're up here and they bounce higher or they're down here and they flip around. It doesn't matter. It just does the ticks when we get to that price level on the price chart, bounce. Does it start to go up? That is my first signal that the market is finding support. Now, depending on how comfortable I am, a lot of times that's when I'll go ahead and throw in a limit buy order right at that support level. So it gets a little bounce, comes back down, it fills on the second one. It'll usually kind of tap it a few times and then it'll run away. Okay. If I don't quite trust it on the first test, the second or the third, that's the one where I trust it. I'm seeing the support in the ticks. I get into the trade. Now, let's say I'm looking for support at that half gap fill. The market starts to come down. I look at the ticks and they don't bounce. They either stay sitting exactly where they are or they start moving down instead of moving up. Well, then I know I don't want to enter a long trade here because the market is probably not going to find support. Then I immediately start thinking, okay, what's the next support level, which is the full gap fill. And then I do it again when we get there. When the market gets to the full gap fill, do we get the bounce on the ticks or not?
Do you have any signs if the gap fill does fill all the way? Is there a point when it re-enters the previous range where you, well, sometimes gaps aren't always lead to trend days up. They can lead to trend days down too. So what's your
time and volume? Yeah, time and volume. So if I'm in a gap fill trade, I'm always taking profits, like you said, a tick above the high every time. I lock in profits on the gap fill trade when the gap is filled. But then what I'm paying attention to is once the market gets into that previous day's range, what happens there, right? Does it just poke in and then pop right back above? And by pop right back above, I mean like within 5 minutes, right? Does it go into the range and in less than 5 minutes, it's back above again? That's very bullish to see, right? That tells me buyers were waiting inside yesterday's range. And so that would make me think it's going to be a gap and go. It's going to start to head higher now. If it pushes inside there and it stays inside yesterday's range, then I start to say to myself, okay, what's the next support level and the next and the next? And I start looking for the market to start to test those levels. So it is purely how much time and how much volume it brings in inside the previous day's range.
And I really think that's where market profile, having the market profile charts is so helpful because it really gives us that three-dimensional look at the market that people just looking at candlesticks don't have. Time and volume is key to giving yourself an edge and understanding what's happening in the market.
Yeah, I completely agree. I could lose every single thing I look at and still keep trading except for market profile.
Right. Me too.
If they told me market profile was illegal tomorrow and I couldn't use it in my trading, I would have to completely start over my approach from scratch. Like, cause that is where I see what the market is doing is in the time and volume.
Yeah, for sure. So this is an exciting day then today. We got a gap. That's super exciting. These are the big opportunity days. So I hope everybody is, positioned well. And
people ask me, do you ever trade during the first hour? Today is a day to trade in the first hour. Whether you're looking for the gap fill trade, you're trying to make money, from wherever we open to the previous day's range. That's a trade you're going to have to get in very quickly. Like the market opens, maybe it tests the overnight high, comes back through the opening price. You got to be in that trade quick, right? You don't want to wait around. Same thing with a gap and go. If the market is getting half a gap fill or a full gap fill and it's getting support, you don't want to wait around to get in that trade because if it's a gap and go, it'll just go.
Yeah. And I found on days where I don't get in right away and I hesitate and I wait, I just have a hard time jumping in later because I think I'm too late and it's hard to get in once that thing takes off. So if you can get in early and then move your stop at least to break even, then you can relax and see what happens. But yeah, so be quick on your feet. All right.
Thank you, Dee.
Thanks, Charles.
All right, everyone. Bye.